All right, good day to you all. Sam here. Yeah, there we go. Sorry, my machine's running slowly. I've got so much open. So anyway, Sam here. It's mid-morning here, December 4th. And I've got in front of us here, I've got Vertcoin to Bitcoin. A number of members. This has been a real favorite. A lot of people have done very well in this crypto this year. And there's just an absolute treasure trove of technical trading education in here. There's a lot of things to learn as we go through this, and potentially some opportunity with the market where it sits right now. So I thought I'd just take you through this. Now I've got the 4-hour here of Vertcoin to Bitcoin on Bittrex. And I'm just going to back up a little bit, right? So, I try to keep these videos as short as I can, but there's just so much to learn here. So I'm just going back to, I'm picking the lowest low I could find, via a 4-hour prior to the big long downtrend that we had, and then this long base that we had here. And I just grabbed the lowest low I could find. It really doesn't matter relative to where we are here. It's the lowest low per that descent here in this long consolidation. And then we get our first signs of impulsive behavior here. So let me open it up a little bit so you can get a better look at it. So we get, some sort of 1, 2, 3, 4, 5. So reasonable to put this as some sort of impulse. Right now, in hindsight, of course, now we can see it, that's likely a one wave. But, again, looking at what happens after that, we get a very nice ABC, and it's very technical. Let me, again, just sort of open this up. So you can see we get an A, then we get our 3-wave B. We don't get to the new high. Then we get a nice 5-wave sequence down here, and we go deep here, but we hold. It's quite technical on this 5-wave here. You can see the wave 1 here, which is, these are just, the idea here is to look for, technical trading. So we get the most common target for a wave 5, right? So we're in our C wave. We get our 1 wave projected from our 4th wave, and we get to the tick, right? So there's the 100% telling us that reasonable odds at that moment that you've got a completed ABC corrective action here, given that structure. So very technical, good sign. This gives you nothing more than a degree of confidence in that pivot because of that technical trading. So if I take that off, and I can look at this and say, okay, well, if that's my 1, 2, what am I expecting? Of course, well, now I'm looking for an impulsive move. Now, one of the things that I always encourage members to do, or just people watching these videos, if you think you have a 1 wave, you always want to wick it off, right? So I like to use these dashed yellow lines. Wick that off, because that may very well play a role later in your Elliott counting. It may give you some important guidance relative to what's happening on the larger degrees. So I wick that off because that's my potential wave 1. Here's my 2. Now so again, if that's my 1, 2, well, now I'm expecting an impulsive structure. So given that, I'm looking for a 3, 4, 5. Now I'm on the larger degree there, right? So here in white, this would be my largest degree. So that potentially is much, much higher. But given that I'm expecting subdivision into that 3rd, and I get this first impulsive move here, that tells me that potentially, looks like I might have had, did we overlap there? Yeah, so perhaps I've got a leading diagonal into that first 1. So that tells me, okay, I'm so far so good. I'm on track. Nothing violating what my expectation or any Elliott trading rules. So looking here, well, okay, if I get maybe I've got a 1, 2, this is my 3, I get a triangular 4th, and there's my 5th to complete my 1. Well, then I'm just going to do rudimentary. I'm just going to pull fibs. So I'm looking for any technical trading. Well, we go to and through the little pocket here. We get this spike. And then we come right back, and we go right back into the pocket here. But one thing I thought was worth noting, when you see that and you get this random this spike down here, well, most likely that's some sort of algo trade there. And so I would measure that to see, is it random? Is it technical? So knowing that often there's a relationship between the A wave and the B wave, I would look for that and take note here. So we go a tick from the 100%, right? So A, B, C, we hold, we know a second can go as deep as the 786, sometimes even deeper, as long as we don't violate that low of our one wave. It's valid. We'd like to see them stay above the 786, but this tells me that good odds I've got a technical swing low here, and that once again, because it's technical, I've got a pivot that I can start working from. So that gives me confidence that I get an A. Here's my 3-wave B. Right? And then boom, down hard. And if I were to take, I'm on a 4-hour now. If I went down to you can almost see it. It's probably hard to see, but you can see a little 1, 2, 3, 4, 5 on the spike. So likely I've got my ABC in because of the technical trading on that pivot. So that gives me confidence that I've got my 2 in. So 1, 2. Okay, what am I expecting? Well, I'm looking, of course, now for my third. So let me just take some of this off here. So well, let's see. I guess we can still make that work here. So there's looking up above. Okay, so 1, 2. We come back just to check it. We tap our little window here. We go right to our 1618. We go right to our 61865 box, and that likely lines up for a 1, 2 of the next degree. Well, given that, then you can see we get a little subdivision yet again. 3, we get an 8. I'd have to go down to let's go down to the 1 hour so I can make it clear for you to see it. Okay, so we get a very deep A wave. So open to interpretation here. So I'd have to go to the 15-minute. So likely candidate here for our fourth, given that we don't overlap the wave 1. All right? So, or pardon me, this would be the wave 1 here. So taking my own advice, I would wick that off. So we get the ABC. So you could probably make a case, because we see this so often in crypto, that you may have had an ABC here, giving you that shallow, that triangular ABC. So it's one of the other, right? Then so you got a reasonable case for either count. So you'd be looking for subdivision on the next count. Well, let's take this off. So given that we've got that, let's get a handle on where we may be relative to this being the likely pivot high here for our third. So we're going to want to measure, of course, from the start of our 1, project from our 2, looking for an Elliott fib relationship for our third. Well, if that's our 1, we project from our 2 where we think we've got a good pivot. Well, this gives me confidence here that this 3 looks likely, because I'm 2, 3 ticks from the 2618, which is the extreme for the wave 3. So we just come shy of it, which gives me some sense of confidence. So again, we're going back in time. It's relevant only in the context of establishing this as a working pivot for our third, and this is our 1. Because of that technical relationship, whether the 4 is here or here, now that I look at it, you may well have that ABC truncated C that we are experiencing all over crypto. We're seeing it in, coin after coin. So that may well be the case. I'll spare us the time of going down to the 15-minute to dissect it. What's important here is that we don't violate this. Now, look what happens here. If indeed we get this is our third, right? Highest wave, 2618 of the wave 1. This is why it's important to wick off these wave 1s, because now we're looking at this going, okay, well, if that's my 1 wave, I'm expecting an impulsive structure, and I cannot have the 4th wave overlap my 1 wave. And you see that? All right? Again, it doesn't happen randomly. It's not random. So there's my pivot low, and we go, if I double check it here, let me make sure I'm right on it. So we'll get right on it for my wave 1. Right, we pull back out. It literally double top. It literally taps it without violating. That's as technical as you can get. So the point of going through all of that is to build confidence in this as my 4th. That technical degree here, that technical trading here, gives me a high degree of confidence that I've got a good 4. So what the process is building confidence in those pivots, because you're going to start projecting going forward. Now, given the technical trading that I'm seeing here, this makes me want to take a long, hard look at what my expectation would be coming after I've got a fourth. Well, again, because I'm building confidence in my 1, my 2, each one of these has been very technical. Down to my 4, we don't overlap the 1. Again, it's not random. I promise you that's not random. So we get this technical pivot here, and then from there, my expectation is, if that's my 3, my 4, I'm looking for my 5th. All right, so of course, there's no reason to anticipate that it wouldn't stay technical, or that I wouldn't maintain the Elliott wave structure that's been unfolding so perfectly as we've gone along. So what happens here? If this is my 4, I'm expecting my 5th, but I'm also expecting subdivision in the wave count. So I get a 1, whether it's 2 here or 2 here. Again, looks like we get that truncated C wave. So it looks like we get an A, a B, a C into our 2. Interestingly, this prior pivot here seems to be playing a role. Remember, if I go all the way back out to that wave 1 high, remember this way over here? Right? See how that the point of keeping that on your chart is that you can see that come into play again. So here it's not as technical relative to the wave structure. It's more a point of prior resistance offering support. Right? You see that prior, whether you're thinking in an Elliott context or you're just thinking in terms of market structure, prior resistance offering support. Prior resistance offering support, right? So now you put it into an Elliott context, and that tells me that okay, I'm on track here. The roadmap is intact. There's no reason to anticipate that it doesn't continue. Well, take note here. Here's if I've got a 1, 2, 3, 4, my 4 overlaps my 1. Well, where am I in the count? Since I'm looking for subdivision into my 5th, this plays because I get a leading diagonal in my 1 wave of my 5th wave. Okay, do you see that? So I get my 1, 2, 3, 4, we overlap, I get my 5th. So that tells me, since a diagonal, a leading diagonal, can only be found in A wave or a 1 wave, I've got a high probability candidate for a 1 wave here. Okay, given that this is my 4, this plays perfectly. So there's my leading diagonal into my 1 wave. What's my expectation? If that's my 1 wave completed there now in that 5-wave structure, I'm looking for my 2. Well, we know that a 2 can go as deep as the 786. We actually get a tick or 2 through it, but interestingly, that prior pivot high holds it. So this gives me some confidence here that I've got a good 2 within in my larger degree here in blue, within that count of my 4. So I've got 3. Sorry guys. That alert got me. Let's cancel that, or let's save it. Let's get back here. Okay, so you can see I've got an alert here because I want to pay attention to if and when we come up to that algo target. That's why that's going off. Okay, so there's 1, 2. Now, another exercise that you guys are getting used to this now, right? Because it's so important to look for these relationships. Again, it's a puzzle. We're building evidence in these pivots. We want to build confidence in these pivots so that we can start projecting from them. So given the technical nature so far, there's no reason to assume that we don't have some market geometry coming into play. So I'm going to go from my swing high to my swing low, and I'm going to go to my wave 1 high. And I'm going to get it right on there. Okay, so I look at that and I go, okay, well, there's my pitchfork, there's my median lines. Well, okay, that's not doing much for me. I mean, I suppose you can make the case here that since we know that one of Andrew's 4 trading principles is that if we establish the 3 most dominant pivots, we've got an 80% probability of making the median line. Trading principle number 1. Trading principle number 4 is that a failure to make the median line implies strength, and the expectation would be that the market moves in distance equal to or greater than the prior swing, which would imply a move in excess of 100% of that swing. And look what we've just done here. Okay, so you've got trading principle number 4 in play there. But because of the steepness of this, I don't want to leave that without checking some of my alternates. So I'm going to go over here. I'm going to look at that and say, okay, well, I know I've got 3 technical pivots. Well, let's check the shift. Well, that's kind of interesting. Okay, so now this gets a little more interesting to me in terms of what kind of value this pivot. See, again, I'm building a case for a good pivot there. So with the shift median line, I come right to, so bang, bang, bang. I'm hitting the median line 3 times. Now here, I'm building even more evidence because I've got my 786. I've got my price pattern, my Elliott pattern here, expecting a 2, knowing it can go 786 of the length of wave 1. I've got my median line, the shift median line. It's banging it, goes through by a tick or 2, but we go just a couple of ticks shy of that prior pivot high, all building strong evidence that I've got a wave 2 in. Right? You see that? It's confluence. It's a confluence of evidence to build confidence in each one of these pivots. That's all. That's why I'm taking you back through the history. You know, I get people say, you know, a lot of here's what the fundamental analysts will say. Yeah, sure, the technician, they're great with hindsight. Great when you go back and look at it. Well, that's bullshit. The point here is to build evidence of continued technical trading. Now, saying that, I'm not implying that this must continue to tick off every one of these pivots in a technical manner. What I'm saying is the market is trading technically here with incredible precision. There's no reason to anticipate that to not continue until it's proven to not. Right? You see that? So the whole point of this is building evidence into each. That's why it's worth going back through how the market's been trading to see how technically it's been trading and build confidence in those pivots. Because if I've got a 3-4 and I've got my 1-2, well, that gives me a strong degree of confidence in projecting my next pivot. So if I'm long here off of this, well, the first expectation is that I'm not going to violate that low. So if I were long here, even with a very tight stop, you know, it maintains. So we come back and we actually tick the 786, yeah, I mean, to the tick. And then I get my spike. And we go to and through the upper parallel channel of that shift median. Well, okay, so there's nothing surprising there. So we know that median line trading principle number 2 is that very often the market will make a pivot at the median line. Okay, so I've actually got multiple things happening here. So I've got median line trading principle number 1 with 3 identified pivots. I've got an 80% probability of making the median line. Will I make it once, twice, 3 times? Trading principle number 2 is that the market will very often pivot on the median line. So again, building that confidence. So I've got trading principle 1, trading principle number 2. Well, now we go outside of it. Okay, my expectation is that we're going to stay technical. So we get a 1. If this is my 1, well, I'm getting a deep 2. No question about it. I'm getting a deep 2. Okay, but we know that that's not to be, you know, it's not, you know, it's not to be something that you wouldn't expect for a deep 2, right? So it's a push to break the low. It's a push to get to new lows for short sellers or people that caught this move are taking profit and losing confidence. Maybe people haven't done this work to know how technical it is, or they don't know how important that pivot is. Well, okay. I mean, again, I'm just making the case. Could we potentially now have a 1-2? Well, if that's the case, right, we have not violated any Elliott rules. We've got this algo target up here of negative 23.6. But if that's a 1-2 and I'm getting a deep 2, well, I'm going to want to start projecting for a 1-2. Well, we know that the most common target for a third. Now I'm staying in the blue degree here. If I'm going to get a third, I'm going to go from my swing low to my swing high. I'm going to project from my absolute low here. And we know, see, thus the box, right? So I get a hot box up here. So the most likely target for my third, the highest statistical probability for a third wave relative to the wave 1 measured from the wave 2 is between the 1618 and the 175. All right, so there's my target there. Of course, I'm anticipating that I'm going to subdivide on my way there. Okay, so I've got potentially a 1-2, and I'm expecting subdivision on the way into my third. So I may very well have a 1-2 here. Let's check that. Okay, so first thing I've got to be sure of is that on that larger degree, on the blue here, that I go at least 100% the length of 1, right? And we already looked at that relative to the median lines. So we've got 1, 2. We can quantify this as a third because it would be longer than the first wave. Right now, it's just a potential third. Right? We don't know this. We can't be definitive about this count, but this looks interesting to me based on what I'm seeing. So with the hot box marked up here, and with confirmation that we potentially have a 3 as it's longer than 1, so I can take that off, and then I can start to measure down here. Let's go down a little bit and look at this. With this as our target here. Well, if that's my 1, well, let me take this off so you can see it a little better. Okay, so of course I'm going to do just what I advise you to do. I'm going to wick off my 1s because I want to see if those, because of course potentially these can come into, I've got so much open, my machine's slow today. Potential play later on. So we want to pay attention, look at this, so we get through it just by a tick. So I'm going to wick those wave 1s. I know those have potential meaning later if and when this count unfolds. So I've got wave 1, wave 1, wave 1, all wicked off because they're important to me. We'll take note here. So if that's my 1-2, let's just check that third. Well, yet again, right? What do we know, right? It's waves within waves within waves. We know the most likely target for our third wave is between the 1618 and the 175. So just as this is the target up here, for the degree here in blue, on the smaller degree here, this is my target. We go a tick from the 1618. So what does that tell me? So it gives me confidence that I've got a good wave 3 here. Do you see that? So what's my expectation? Okay, well, I'm looking for a 4. At this point, it looks to me like we've got a triangle here in the fourth, which would be very common, and we can see Elliott's rule of alternation in effect here. We get a very simple correction here for a second wave, which, by the way, I believe, if I recall, not quite to the 50, just a couple of ticks. So you may have Algo's front running the 50 there. So there's our 2. Here's our negative 100. We're 2 through that. So Algo's got their targets, but there's the Elliott target for our third, statistically highest probability for the wave 3. I mean, you see how technical this is? So now we're getting this triangular pattern here. If, and we don't know, but if this is going to continue, the expectation would be this resolves higher. So if this is, there's complexity here. So I'd have to go down to the 15. But either way, the expectation is that I'm going to resolve here higher, and I know I've got a target potentially that far up. Now that would be extreme, right? But and potentially we end up relabeling here. But right now, that's my target for the third of the higher degree. You see that? So if that's my target and I've got a 1-2, I've got the start of it from my pivot here, well, I'm definitely going to put a pitchfork on it. I'm going to start there. Go into my wave 1. Well, I want not, well, that's interesting. There, corner to the median line, but I want my original. Okay, so trading principle number 1. If you have got 3 pivots identified, and as we do here, right, and they've all been technical, with 3 pivots identified, we have an 80% probability of making the median line, right? So again, as I've said many times, you don't have to be an Elliott wave technician to take advantage of this. It certainly helps, but you don't have to be. You could do nothing other. I mean, I call it, as you guys know, that this is my corner pocket trade. You could do nothing other than specialize in that trade. Again, as I've said many times, where else in the market do you get 80% probabilities? Nowhere is the answer. Nowhere else do you get those odds, which is why I became obsessed with Andrew's median line trading as I was learning this stuff. Nowhere else. I mean, when I saw that, I had to double check it. I had to dig around on the internet and any resource I could find to understand that. Right, and now we know that algos use it. Right. So again, because an algo can be written to take advantage of the 3 dominant pivots. You see that? Right. So we nothing says that we have to go here, but it wouldn't surprise me. But high probability we're going there. Right now, this is not a corner pocket again, but I've got potentially a 1, 2. We don't overlap the 1, right? That's why you always want to wick those 1s. I've got complexity here, so this could fail, right? It's not guaranteed that we're going up here. But at this point, we have probabilities working in our favor. Again, it's about building a case of evidence. Am I willing to put money at risk here based on the odds of what I'm seeing? There's no reason to expect this to fail. In fact, the expectation is that it continues. And we trade it until it fails. So I've got a 1, 2, 3, 4. So I might do some other projecting here just to take as much evidence as I can build. If I've got a 4 developing here, well, I'm gonna take off. Let's see. I'm gonna take that off, so you can see this. Let's get it down again so you can see it. Okay, so I'm gonna take the length of my 1 wave. Potentially, I've got my 4 in here. So here's my here would be an extreme. Well, so here would be the minimum. Okay, so this very well, right, could be a potential target. And that would not invalidate the count, right? So from here, high probability, there's the 100%, which would be the most common relationship from wave 1 projected from if this ends up being my 4. And I'm just hypothesizing here. We don't know for sure that the 4 is in, but it sure looks that way. That's very characteristic of a 4th wave. Well, we know this is still valid as a 3rd, just because we have the probability zone up here of the 1618, 175. Remember, we drew that. We know potentially this 3rd can be in because we've already done 100% of wave 1. So it doesn't have to go there. So this is certainly valid. That would be a 1, 2. We'd stay consistent. We get the subdivision into a 3rd. We'd look for the 4th and potentially back to the median line for a 5th. Do you see that? The whole point is where can we get statistical advantage? Where can we get probabilities working in our favor? Where can we get a confluence of evidence so that we're comfortable putting our money at risk? And where can we get the risk-reward profile that makes it worthwhile for us to put our capital at risk? All right, so if you're a buyer here, so even if you're just buying here off of the break, okay, so first target, right? You don't need to go below that. So it's 2 to 1. It's not terrible. Not terrible, nothing wrong with it. That's a nice punchy little single. If we're going to go up to the hot box, well, now you're at almost 4.5 to 1, right? So maybe we go here, and that's you bank a little partial. But remember, if we top there, and we know median line principle number 2, high probability that we get a pivot at the median line. Let's just say that if we were to top there, okay, and you were in that trade. Well, let me move this off. So you've already made money here. So at very minimum, you could move your stop to break even. Maybe you take a partial profit there. Well, if that's my 3, my expectation is that I'm coming down for a 4. Now, if this is going to stay as an impulsive structure, I don't want to see that wave 1 overlapped. Right? Do you see that? But I mean, it's always subject to relabeling based on how the market responds. So if we wick that, well, then we might have to reconsider. Maybe we have a diagonal. Maybe we've got to reevaluate that. Maybe this is 1, 2, 1, 2, 1, 2. We just don't know yet. You got to wait and see. So right now, highest probability trajectory here is to the 100% and the median line. All right. Now again. Let's get the algo target on there. So if this is my 2, there's my 3. Here's the 50 to the 618 window and the 38 to the 50 highest probability zone. So look how we're just hovering. Well, here's my algo target. So I get a little hot box up here. So here's my potential target there. 100% via the Elliott count, the Elliott fib relationship. And there's the algo target, the negative 23. Right, so high probability target there and with a tap of the median line. Again, building a confluence of evidence to make your case. Is it worth taking the risk? Anytime you go into the market, your capital's at risk. Is the risk reward enough there? Well, you might say that 2.5 to 1 is not enough for you. Okay, so be it, right? I mean, here was the trade, right? So here, I mean, that, I know it's, yeah, right. Yeah, Sam, it's easy in hindsight. Well, there was the first one, right? You could be in that with a very tight stop. If you're going to go all the way to the 100, well, that's 11 to 1. If you're going all the way up to the hot box up here, well, there's 15 to 1. You see that? So the point, I guess I'm belaboring the point. I just want to make sure you get this. It's where can I get statistical advantage? Where can I get confluence of pattern, price, time, median line, structure, geometry, fib pulls, fib extensions, alternate price projections, Elliott count, Elliott wave relationships. Where can I combine all of those components to tell me, okay, that's a reasonable risk reward. I'm willing to put capital at risk based on how technically the market's trading. No expectation that it doesn't continue until it fails. All right. Okay. That's, oh, wow, 30 minutes. I went long. Man, I'm getting wordy lately. Well, we did have a little slowdown here at the beginning because of my machine. I've got so much running at once. Okay, guys, I will wrap it there and be back later.